Hey guys, welcome back to the channel Best Ways for Long-Term Stock Investors. So today will be a bit more educational and we will share with you our thoughts on a couple of companies where we identify certain elements about it that made it a stock that went up really fast, and it also went down really even faster. Actually, there's a special phrase for this. I will not be using it. So we're going to share with you what are some of the potential orange or maybe even red flags that some of these companies represent, so that you can avoid losing this sort of money in the stock market. Now, as a disclaimer, none of what we say should be constituted as financial advice. We are not professionals. Please speak to a professional if you need that sort of advice. What we say is purely educational. Also guys, we have a 6 to 7 figure portfolio masterclass training just for you, absolutely free. If you're interested in building a 6 to 7 figure portfolio using the power of stock investing, go ahead and sign up in the comment section or the description below. Looking forward to seeing you there. All right, Jonathan. So we start with Anzo. Right, yep. Anzo is very interesting share price, very interesting. So we actually snapshot this. Apologies, there's the x-axis is a bit buggy. Google fix it. I think September 2nd, right? The market cap was 16.74 million. Yep. And then on the day of this filming, which is the 5th of September, the market cap became 8.37 million. Yeah, that is very fascinating, right? So this is an example of like a very steep rise in price, during 2017.
But actually, to be fair, right, the share price movement is only like down. I'll say like it's not even 5 cents. It's like 0.005 cents. Only, and which means when you're down at that kind of price point, right, it's like 50% down.
And what's interesting about this company is that this is not the first time something like that has happened. So 1 here, 2, obviously this big one, and then 3, 4, and 5 or 6 if you consider all these smaller ones, right? So what happened?
Okay, so I think this news headline did not really got into like the lights of all of the retail investors. I think this is just like hit around the bush. Like nobody really pay attention to this news, right? So actually, if you read the news, the Edge, right? Basically, the Bursa actually fined this Anzo company, the directors of 300,000 ringgit for related party transaction and diversification breaches. So what happened was that when you actually do some material changes in your company, you have to actually make announcement to Bursa. And also before you actually made such announcement, you have to get like an approval from the shareholders. So that is the basic requirement that is needed by the Bursa Malaysia. So what happened is Anzo actually breached these two very important criteria. Basically, they didn't announce and they didn't get approval from shareholders.
All right.
So what kind of breaches did they did? So they did a business diversification. In 2019, initially, they only have 2 business divisions. So there's only the construction division and also the timber. And then, but in the 2020 annual report, you notice that there's a new division, which is the trading division, where they actually trade like copper straps and construction materials. And this wasn't really announced in the Bursa immediately. Like, for example, like in the case for Anzo, right, they didn't even get an approval from the shareholders that they are gonna do this business. So it is like they didn't even have any AGM or EGM for this kind of thing, and I believe they also delayed the announcement. Like, so for example, when they got the approval and they started to do this business on I believe it was on the 16th of June, they only announced it on the 25th of June.
Interesting.
Yeah. So if you go to the next slide. Okay, so this is just a further kind of explanation by them. You can see that this business was approved by the board on the 16th.
Yeah, and usually they have to do it almost immediately, right?
Yes, exactly.
AGMs or EGMs, right?
Yes, so that is why they actually failed, and they also actually failed to issue a circular and obtain shareholders' approval and appoint all those independent advisor and whatnot. Okay, that is aside of the point, I mean, I don't think we can predict this kind of thing, like, because this is like the company. We won't even know when companies even venture into this new business, and so these are hidden red flags that is hard for us to anticipate. But there's actually already established orange flags that we discover when analyzing this company. So the first thing is that since I believe it was in 2009 to 2022, they actually changed their auditors 4 times.
Wow.
So auditors are coming and go. I mean, I think it's pretty normal because this business is not really that profitable to begin with. The cash flow also is really very bad. So I think it's quite normal for auditors to actually like change that frequent. And another big pointer is that the managing directors also have been changing. There's like different phases over like the past 10 years. So that's another interesting bit that that it can be an orange flag if, let's say, you see all of these changes happening right so frequent. And the last bit is that their remuneration is actually growing. So I see, if you look at the graph on the on the right hand side, so the remuneration per member I calculated, right, it's actually growing, whereas their cash flow is actually like negative and it's even dropping.
These are dark orange flags.
Yeah, exactly. So that is one of the bits of the orange flag when you actually research about companies. And next we're going to be talking about jadem.
Yes, we will look at it later. Guys, if you didn't know, we have a one-on-one mentorship program which you can apply to. If you're interested in leveling up your stock market and you think we can help you do it, go ahead and apply. Only 20% of y'all will get an interview with us, and even fewer will actually hop onto the program. But if you are confident that you can work with us, go ahead and apply in the comment section or the description. All right, Jonathan, let's look at Jade Marvel.
Or jadem.
They call him Jadem.
Yeah. That's the code name. Jadem.
Oh, Jadem. All right. So, price action down 69% nearly.
64.
So for over the past 5 days.
Yes, 5 days.
It is 69%, but in the span of 3 days, right? Yes. It is down 64%, 86 million market cap. What in the world is happening?
Okay, so I believe they just recently announced their latest quarter. I believe it's the first quarter for financial year 2023. So prior to that, they actually did announce that they're going to a lot of business diversification, which I'll show you later on. But I think a lot of retail investors expected them to perform better, or through their different ventures, they actually can get more profitability, but that's not the case. If you notice, right, in the previous quarters, they actually making profit. Like I would say, like some even like 15% to even 36% of profit margins, which is quite good. But the latest quarter reports has been quite disappointing. The reason why it has been dropping is because number one, there's the increase in cost of sales. That
is massive. That is a 6 times, nearly a 4 times increase.
Yeah, 4 5. Yeah, exactly. And another thing is that they also have an increase in admin costs. I believe it's another 7 times increase.
Wow.
In expenses. So both of these costs has been increasing, which is actually due to their business diversification. So we actually look at their business. So initially in financial year 2021, they are actually doing 3 business. So the first one is investment holding. Investment holding is basically they let out their properties. And then manufacturing. Manufacturing, I believe, is they are doing like the luminous, kind of like, the roads, the black color sand.
Bitumen,
sorry.
Right.
Bitumen, correct. So that's what they have been manufacturing. All those are building materials. And the last bit is basically, actually it's a huge chunk. About 64% of revenue is coming from property development. But in 2022, they actually did venture into a lot of business. So they venture into healthcare. Healthcare is basically glove. And then they venture into financing. Financing basically is your money lending. And then they also did like construction and all of those interesting bits and pieces of business.
This is something you would expect in a startup.
Yeah.
Right? But I think even for us, I don't think we can add like 3 new products to
we cannot,
our business.
Man. It's just too much to handle.
Straight away, right?
Yeah. And hence, if you have like this kind of so many business diversification, right, your cost of sales and even your operating expenses will definitely like double up or triple up, right?
Yep.
Yeah. So that is actually one of the reason I believe financially or fundamentally.
Contributes because suddenly, you have more expenses, more departments to handle.
Yes, exactly. Okay, so this is an interesting bit also. If you read in their deeply in their quarterlies, right, there's this material litigation that they have, whereby one of their customer, which is Nanjing Changjiang Waterway Engineering Bureau, they actually filed a right of summon against, I believe this is the managing director or board of the directors, and also one of their company, which is JMR Conglomeration Berhad. So this has been an ongoing fight between these two. I won't go deeply into this because it's another complicated topic.
Of course.
Yeah, and it has not been solved yet. So it has been put on hold, but it's still in battles. So this is something that you need to know, that they are currently in a court case.
Okay.
Yeah. Okay, so this is an interesting bit by The Edge. They actually reported that the reason why there's such a huge fall, about 60+% in like 2 or 3 days, right, is because there's like one of the major shareholders actually kena margin call. So according to them, there's actually 4 major shareholders. So the first one is Jade Marvel. Not JMR. JMR Consolidated Holdings. Right. So they actually own about 8.41%, followed by X Infinity Holdings, 6.5%.
With all the respect, sounds a bit like a hassle on.
Yeah,
but anyway,
exactly.
Continue.
Okay, so and the rest is all this. And you notice that I actually highlighted this company, which is Global Legacy Partners on the other hand. So you need to take note that their current stake is around 4.61%. Right? So I actually did a little bit of digging on their shareholdings analysis on the AR. Right. So you notice that the Global Legacies Partners initially have around 30 million shares.
9% of the company.
Yeah, exactly. And that has dropped to about 4.61%, which means they actually disposed about 15 million of shares already. And another thing that is pretty interesting is this X Infinity Holdings, where they actually increased their stake. The reason why I say this is so interesting, right, is because I did a double cross check. This is from the AR, and also I did a cross check with the latest transaction detail that they did. So this is what I found out. Is that the number one, Global Legacy actually has been disposing their shares since June and July.
Ooh.
So this actually does not really I don't think that it triggers a margin call.
Okay.
Yeah, because they didn't even announce that there's like a notice of cease of interest of this shareholder. But another interesting bit is that actually X Infinity did dispose quite a bit of shares. So if you notice right at the bottom there, I tabulated that they sold about 73 million shares, but they bought only 65 million.
Okay.
So that's like they actually net sold around 8 million shares. But in The Edge, they actually reported that they bought. So this is actually a pretty... I'm not sure when these statistics was actually recorded by The Edge, but it's actually interesting that they actually pointed out that they bought shares, whereas in the case of the latest transaction, in fact, they actually sold quite a bit of shares. So it is actually difficult to analyze who got the margin call. Initially, I thought it was Global Legacy Partners, but then I realized that the date doesn't tally with the current share price that is currently dropping, because now they are dropping, which is in August, they dropped about 50%. But this happened 2 months ago.
Right.
Their disposal. So I don't think that matters unless they cease, they become no longer substantial shareholders of the company. So it's quite to analyze who is the major shareholder that got margin call. Yeah, it could be any of these 4. It could be Xfinity, it could be Global Legacies Partner. But this is actually the last interesting bit that I found from my research. Is that sometimes the news don't really disclose the more accurate data.
Of course.
Say. Yeah. So you need to like cross check with your own research so that you can like know whether it's
you need to crunch the raw data.
Yes.
Even in fact, I would say also, even you have a really great tool like Ticker.
Yeah, exactly.
It's still best to go back to the annual report.
Yes.
Right. To look at, what the company is doing.
Yeah.
So I think in conclusion, from what I hear from you is, well, when we look back into the first example, which is Anzo, the first is, of course, related party transactions. That's always something you want to look at. Yes. The second thing is if they keep changing, A, their auditor, B, their managing directors, then that is a cause for concern. And worse still, if the company performance is declining and yet they are being paid even more, that is, I would consider a dark orange flag.
And also to add on, I didn't really mention this, but if you notice the transaction over here, right? This is by the major shareholder.
Right.
They have been doing day trading.
Interesting.
Yeah.
So we'll get to that. And I think the last bit for Anzo as well is that you don't want a company that goes into 3 new different businesses in less than a year.
Yes.
Right. Now for Jadem, not so intense.
Yeah.
But that's why they only down 70%. Right? No, by kidding. So how you summarize the key lessons for Jadem?
Well, actually, aside from looking at their financials, I mean, I have studied their financials, and I didn't put here because I know it's really bad. It's just that I want to dig further what other causes, right? So I think about Jadem, number one is that also another business diversification that they did.
Okay.
A huge chunk of business venture that I believe is also what we covered in the last topic, FOMO.
Okay.
Basically, the companies, for example, like Glove. I mean, why did they even want to venture in Glove, right? When right now it's actually loss making.
Yeah.
And another thing is that major shareholders are day trading their own companies. It's like, I mean, as a business owner, right? You want to grow your business, and also you kind of like, there's like a hidden rule that you should hold your company dearly instead of this day trading, right? It's like you are a retail investor in as a business owner.
And it's not small, right? It's like 10-20% of their shareholding.
I believe so. Yeah. Around there. It's quite a big amount of day trading.
All right.
Yeah.
So guys, if you enjoyed the video, like, comment, subscribe as usual. Click on the notification bell so that you get updates of our new videos straight away. And if you find this video interesting, and you know someone who might find this video interesting, please share it with them, and we will see you in the next video.